It is always a better thing when we're doing good news Wednesday or good news any night of the week when the stock was actually up for the day. So here to help me celebrate another up day in the stock and the market for Tesla, Jeff Lutz. How are you doing, Jeff?
Good evening. How are you? Good, Randy.
So, question, is Kathy Wood and ARK Invest holding the stock up all by themselves after 9 days of buying lots and lots of shares?
No, I mean, technically it was pretty significantly oversold. If you look at the RSIs and, I guess, the flood of not so good news, trickled off and, we had some decent numbers out of China and, but yeah, definitely the FUD is up pretty high. But there's also, I think, a number of good things to kind of point to as well.
Yeah, so I think some of those good things finally overtook. There's also kind of a running theme right now of the short term not being great, but the long term being amazing. And Baird just took a tour of Fremont, and I just thought I'd read a little bit from their from what they said about their tour. They said they took a Cybertruck test drive, and he says they're doing great. The Cybertruck is awesome. Their first impression of the Cybertruck were positive. Cybertruck gross margins break even by the end of the year. Apparently, IR told them this. Still room for cost of goods improvement going forward. The next generation vehicle architecture demonstrates manufacturing advantages going forward. That's not news. And then FSD beta V12 rollout underway. We had an opportunity to ride along, and Tesla launched FSD version 12 late in quarter 423, 400,000. Anyway, they just to kind of explain it. And then they kind of go on to say that they think the quarter one is not going to be even as good as what the analysts are thinking right now, that their short-term impression is not great, but that they have a price target of 300, and their long-term position is that it is a core holding. So your thoughts about what Baird had to say today?
Yeah, a couple of things. I mean, first off, they still have a $300 target, and I've had this conversation with a couple of analysts, and I've even offered, even help. Just hey, these analysts go on who are these analysts when they go on a factory tour? Do they know? I'm not trying to be insulting or anything, but what are the questions that they're in a factory? Like what questions are they asking that are that are ultimately probing that they couldn't have asked in a conference room? Like, so what are you actually going into a factory to do? I think when you walk into a factory, Randy, I think you would know some of the questions to ask, whether it's around utilization or velocity of the product or what have you. I do like that they called out the COGS comment because that was confusing to everybody except me and maybe you and a couple of other people. That for people to think like, oh, we're done with COGS, like this platform is done. I mean, that to me that was totally ridiculous, and that was a CFO kind of giving the I've got to give the kind of a worst case view to people. And meanwhile, the practitioner stepped up to the mic and said, "No, we have got this, I got this, this." And so they kind of must have reaffirmed in this meeting that there's still plenty of work to do on COGS. I think they're going to be cutting COGS on these vehicles. First off, they're going to refresh the Y.
Right.
They're going to have a whole new set of opportunities. They have the Model 3, but they have plenty of opportunities with or without refreshing the vehicle. And I mean, I still think they've got north of 10% or more to go on the COGS of those vehicles, and not like a huge stretch, but between now and the introduction of the next compact vehicle. So I'm glad that they called that out. Everybody loves the Cybertruck. I saw them call that out. The COGS break even by the end of the year. I mean, that says something. That's a good sign. Maybe they can do better. But that's a good kind of kind of data point they have that shows like they'll be pretty far up a ramp curve, and they would have solved a lot of problems on Cybertruck. So $300 price target, I don't understand it. Like, I know it's called Gary just responding like a bearish fresh pick. I don't understand like all the politics around saying you like a stock or you don't like a stock. Just say if you like it or not. and if you're upgrading or downgrading, but it looks like, they believe the stock's going to be 60% higher than it is today
Right. Which is,
within a year.
yes, which is certainly almost anybody would love to buy as much stock as they can on something if they truly believed it was going to be up 60% by the end of the year. I
Yeah,
might have a little
5%
higher
more.
price target than that. I'm not sure. People are, maybe they've stopped looking at my price targets after my big miss in the end of January. I figure I'm one for two. I'm one for two. I hit that 300 out of the park. I kind of missed on the 410 by the end of January. I don't know, just a little off.
Well,
Anyway,
we'll see.
we'll see. Well, listen, Elon has taken on Disney through X.com. He's supporting, this huge star, Gina Carano. I guess that's how you pronounce her name. I'm not sure. I don't follow the show that she was on, but she was fired based on some tweets. And Elon had promised to support cases where free speech was inappropriately penalized. And so that was the case for her. At least that's what it looks like from an outsider's perspective. But now there was some talk today that Elon might, he teased about buying Disney. Good idea?
Now I'd like to see the market cap of Tesla return to a much higher level. And I'd like for him to get the control that he feels he needs, and to protect the company and to protect himself. So I think those are the priorities. I think buying Disney between those 2 points would be a distraction. I don't think Disney is what everything that's, I don't agree with a lot of the stuff that a lot of these companies are doing, but I don't think the answer is buying everything. I think his influence and his ability to open up free speech and to support it, both, with his platform, and looks like he's trying to support it legally. I think those are great things to do. I know he is capable of doing a tremendous number of tasks concurrently, like more than any of us could even like really imagine. To me, this is noise between him getting the control, him getting his new comp package, and Tesla getting back, over $1 trillion in market cap. I'd love to see that happen before he starts buying more stuff.
Yeah, me too. So, but imagine the rides. I mean,
Yeah. Yeah.
we'll get back to the comp package at a little bit longer later in the show. So I had a conversation with Troy Teslike, an email back and forth, or mail back and forth on Patreon, because I was trying to figure out where he was coming up with this 2,070,000 as his goal for the year in terms of shipments, and also approximately the same in terms of production. I was trying to figure out what the limiting factors were, because I really didn't understand it. So I read his stuff, like every word of it, and then we went back and forth with a few conversations. So he says he just doesn't see it getting to 2.1 million, no possible way. And while he sees some problems with demand, when I finally worked it out with him, what he's really concerned about, what he really thinks is the limiting factor, is domestic batteries, U.S. domestic batteries, as well as 4680s in Berlin. And he thinks that is why they're not ramping Berlin more than they are. And he thinks that's why they're not ramping anything other than Cybertruck in Austin. He thinks that's where the problem is. What are your thoughts about that?
Yeah. I think there's a lot of truth to, when you make these plans for batteries in different, SKU types, and you're doing your own development, you're buying them, and you're doing joint development with other. I mean, these are things you've got to plan out on a multi-year horizon. And they had Battery Day in 2020, and I believe that they thought that they would have 4680 dry battery electrode and at a much higher rate than where they are today, and they're not there. So then what you're doing at that point is you're scrambling, and you're either you're deprecating a SKU and you're building more of one, less of another, or you're trying to slot something in and and replace it. I mean, we've seen SKUs canceled. We saw the Plaid Plus, which would have been a small volume on the SNX. We saw those types of vehicles canceled. So I think there's some truth to there being sporadic, lumpy battery supply until Tesla solves, the 4680. And you heard Drew on the call saying, hey, this isn't the limiting factor for the Cybertruck, but, what about everything else? And yeah, and then Tesla's doing a deal with Panasonic to expand capacity in North America. So yeah, I do think that there could be some, some regional issues with, with supply. But these are things that I think that would improve throughout the year. Maybe it's worse in Q1 versus Q2 and so forth. But these are things that should gradually improve throughout the year. So I don't have in terms of, I like the work that Troy does in terms of vehicle, understanding what's going on with vehicle counts, what production could be, and so forth. I just know from being a practitioner of this that there's a lot of variables that we don't see or know being on the outside of the company. And we used to laugh like when there were people trying to guess like, what was happening with the Droid or the Razor or some, and analysts, people would be trying to poke into our supply chain or calling us randomly, and we saw some of the guesses online, and just the amount of things that get overlooked or not understood is quite immense. So all I'll say is that there's a lot of variability in this, but it's good to have people on the outside trying to analyze this and try to understand it. um, on the demand side, my original estimate was 2.2 to 2.4.
Right.
I still think 2.2 is achievable. Maybe that's going to be the high side of this year. I don't know, but I don't know if I would eliminate that at this point. I don't know what one factor would be that would actually eliminate 2.2, and that would be some fairly sizable growth. You're talking 20% or so more growth
Right.
getting to that. So I've always thought after kind of Tesla reset everybody after the earnings call, I thought, okay, slower growth. Well, then what? 38% unit growth in the prior year. So what if it's something between 10 and 20%? I think that's a reasonable range of estimates. And let's see where that goes. But I can tell you many companies would be killing
Yeah.
for 10 to 20% growth annualized. And so yeah, we'll have to see. We'll have to see where things fall.
Yeah. And so that could, if we back into some of the other conversations that have been going on, if you know that you are constrained, so you can't even get your Model 3 into a battery that is qualifying for the $7,500 IRA discount, and so which tends to suggest that there is domestic battery issues in the United States. So then maybe you wouldn't ramp up your advertising in 2024, at least not in early 2024, until you know that the 4680 and/or Panasonic and/or starts to get you closer to where you do have too many cars and not enough buyers.
That's right. All these things work together. I've been a part of and led some major launches where we're having this conversation of like, hey, we have a $500 million advertising campaign. How do you think supply is looking? Because we wouldn't want to spend this $500 million and reserve all these assets if you're going to come up, way short of being able to supply the product. And so all these things have to work together. And, and I see these inventory charts that are made by random people on the internet. I don't even know who they are. They don't even have their names on some of these things, but there are analysts running around with these charts. And, raw inventory, as means different things at different points in a quarter. And I think people are looking at, like, oh my God, Model Y inventory is the highest ever. Well, production should be at the highest ever. Sales should be at the highest ever. So you are going to see more net inventory. And then if you look at like Tesla in isolation or with the group, the 15 days of inventory, they actually reduced inventory quarter on quarter. And they're so far away from any conventional automaker. A legacy EVs have 10 times the amount of inventory a Tesla has. So people don't take these things in the context, and then they just start like losing their mind. Oh, they're going to have to, they're going to have to cut price. No, well, hang on. No, in the beginning of a quarter, one thing you do is you build inventory ahead of your sellout plan. And as you get into the second half of the quarter, you start leveling that off so you can kind of guide the, land the plane. And just, I think people understand that and they just get kind of caught up in these ebbs and flows. So yeah, I mean, getting back to, these decisions, they're all interconnected, they're all related. But sometimes people try to look at them in isolation and get either worried or get too happy, by the way, too.
Right. So that's true too. So you were active today on X, and I think you were responding to this morning all the concern and worry out there because there was an email apparently that was leaked that suggested that Tesla might be looking at some layoffs because they were asking all their supervisors, all their folks up the food chain to look down the food chain and see who might get cut. And you had some takeaways on that. First of all, the stock went up, and some people were saying, well, cutting, doing a little cutting here and there can be a really good thing. And I think that's part of what you had to say. I don't know that the market moved today because of Tesla having a potential cut in their labor force. But anyway, you said, for instance, Tesla did an indirect labor reduction in June of 2022. Doing this every two years is good hygiene. Musk is known for running lean and trimming in all of his businesses. So thoughts on that
Yeah.
one?
Yeah. I mean, I've been a part of companies where we did this every year, and you don't take any joy in doing this, right? What you're actually trying to do is you're trying to figure out, did you hire people in the last year, or did something change functionally with your programs and your need for those programs where you don't need those people? And what you try to do is you try to figure out how to gracefully get them into something else, whether it's on the outside of the company or it's in the inside of the company. But yeah, you don't take joy in doing this. But if you're on the outside looking in, we're all giving Tesla capital when we buy the stock, and we want them to be good allocators of capital. We want money, we want dollars flowing into R&D, and we want a high percentage of sales coming out. And so one way to do that is for them to control their operational structure. That's called, it's the financial term is below gross margin. You'd want them to control those costs and that spend below gross margin. So as if you're buying Tesla stock, you would want them to be as efficient as possible. So I like when companies do this. It shows that they're constantly looking at their talent. They're constantly looking at decisions they're making. But what's different from what Tesla's doing, again, this is all alleged. We don't have anything confirmation from
Of
the
course.
company. Um, what's different is if you look at all the requisitions posted online, I mean, they're vast and there's many of them.
Yes.
And they're hiring for a bot program, end-to-end manufacturing, everything, Cybertruck, next shift, Dojo resources, you name it. I mean, I even
Mexico.
saw, yeah, Mexico, there's supplier industrialization, bunch of different supply chain roles. So Tesla's definitely in expansionary mode, and they're up 10% in headcount. I think they added 10% to their headcount the prior year. So when you're net growing, but you have the wherewithal to go in and trim and do the right hygiene, that's what you want as an investor.
Yeah, and we also looking like maybe they are trying to increase the production in Berlin. Not clear on that because getting 1 week of 6,000 does not mean they're going to be running 6,000 every week, but they would need headcount there. And they've complained that they've had trouble finding good employees in Berlin, or there's been rumors at least that they're having trouble getting good employees in Berlin.
Yeah, what you want your operation to do is you bought capital and you want to scale the labor force to get to that run rate. You may not run it every week, and when you get to that run rate, but you want to have the capability to do that. And so when you get out of that lumpy supply situation on inbound supply, and your demand is where you want it, then you can turn that crank and run it. And every time Berlin in this first phase fills up, and then they go from 5K a week to 6K a week and 6K to 7K a week. Think of it as like they're filling this cup, this utilization cup up. And as that cup fills up, there's hundreds of dollars of COGS per unit, per vehicle in that factory that are coming down as they increase their utilization on their fixed assets. So this is a very good thing for COGS. When Austin and Berlin were turned on, we went from a world of just Fremont and Shanghai to turning on these two highly underutilized factories, and which every factory starts that way, Austin and Berlin. I mean, it added I mean, I want to say $3,000 or $4,000 of COGS to the whole global vehicle
Right.
output.
Right.
So you can imagine as these factories, it's one of the biggest impacts on COGS is filling up Austin and Berlin.
Yeah. 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 All right. Question: should Tesla be removed from the Magnificent Seven? And no, second question, follow-up question: does it matter?
Yeah, and it doesn't matter. Somebody made up a term for seven stocks, and it's fine. They were probably the top seven market cap stocks, and I think Tesla's dropped to 9 or 10. So I mean, as an owner, we're owners of the company, we're owners of the stock. You don't want to see it fall too far. I'm not a big fan of this, well, it's on sale kind of thing. Like we've had plenty of sales, I think, for the last 3 years. I want them to figure it out. But in terms of like, if it's called magnificence, it all depends on your time horizon. If your time horizon's 5 minutes, then yeah, you're going to be talking about these seven, you're on Kramer's show or whatever. It's today. But if your time horizon is a couple of years, then it's the magnificent, 1 to 2 or 3 companies, I would imagine.
Yeah, yeah, yeah. A couple of people have said that in the last few days. A couple of analysts have said, yeah,
Yeah.
well, whatever it is today, it'll be Tesla all by themselves in a few years. So we have Luca, uh, some of these,
Kirko?
yeah, that's the guy. Yeah. Trying to pronounce his handle here. Anyway, he says a legacy OEM placed an order for 6 gigapresses for one of its American factories. The 6 machines have a clamping force of 6,000 tons each and will be installed by the end of 2025. And then we had Ford. This is me now. We have Ford announcing a Skunk Works developing a competitor to the Gen 3 vehicle. Coincidence?
Yeah. I've had a lot of people have asked me about this over the last day. Um, so first off, when you're 2 years out, I don't know if are they really putting in a purchase order with 100 weeks lead time. I hope not. I mean, what equipment manufacturer has 100 weeks of lead time? I hope this is like they're reserving capacity for these. And why I say this is like, what are they? There's a whole thing of like how much capex you order versus how efficient you're going to be. Like I think Tesla's moving towards this point where they're going to have one press that's clamping the front and the rear chassis, and and all of a sudden you're going to have this press free up. So I think Tesla's really they're far down this path. They've been doing castings now for a couple of years,
Yeah.
and I think they're going to be really far down a path of efficiency. I don't know what they're ordering 6 for, but let's say they're ordering 6. Yeah, it could be. And I think a lot of OEMs have come to the conclusion of like, wow, we have way too many parts in our product. We've got to take that part count down, and this is one way to do it. But when I hear, Skunk Works project 2025 or 6, whatever they gave a couple of years, I mean, first thing you have to do is when a CEO of a company says I'm going to deliver a vehicle and they pick a date and they say 2026, what you have to mentally do is depending on the type of vehicle and the complexity, you basically have to add a year or more to that date for them to actually have something in supply that people can buy at a cost structure that will make the OEM money. Just
Yeah.
like the Cybertruck discussion we had. There's really no Cybertrucks available, but it was 2023, release in November of 2023. But Tesla's not going to get to break even. You're not going to have real supply of Cybertruck till probably a year later.
Right.
I mean, and now you've got Ford, hasn't really shown a proficiency for making um, profitable EVs, and they're throwing out a date on the call and says we've got a Skunk Works team working on it. I think there's some. First off, I applaud them for the effort, but there's got to be some like a credibility lens that's overlaid on this thing of like, okay, what does this really mean, and should I be adding a year or so should I be adding a year just for the schedule, and then do I add another year for for you to get the ramp and the full supply. So it's really incumbent upon Tesla to get this vehicle that they're working on into production in the middle of next year and to really get a decent, size volume of units starting to flow out at the end of next year, or they are going to be feeling pressure. I know Hyundai's got a $20,000 vehicle that they're working on doesn't look super compelling. I think the vehicle that Tesla is doing is going to look really compelling. Um, so yeah, I think that's where it is. You got to really understand like the credibility and the commentary, and then you really have to add that time for ramp, and you have to add that time for profitability, and that's when it's going to become, meaningful for everyone.
So, it's easy to say, oh, these announcements were made, 24 hours apart, and therefore it must be Ford. But do you think a reporter would only think of legacy as the big three, or would they count Honda, Hyundai, Toyota, who all have plants in the United States as legacy?
Yeah, and it could be, yeah, and it could be. Um, but this could be a whole show, Randy. It just when I hear people talking about using castings and presses, Tesla has their own metallurgy. They have their own team. They have a team that designs rockets and the mechanical structure for the rocket, and they have teams that design it and go down to the atomic level for vehicles. And they're the same team. I don't know of any auto company that's got a rocket company doing their metallurgy work. And then, so then that goes back to the suppliers. So the suppliers have a unique formulation. What are these casting suppliers like? And they're working with the Alcoas of the world, and they're working with Steel Dynamics. They're working with all these different companies, but do they have their own formulation? Do they even have a team of people working on this stuff? I don't know. I mean, some companies don't have the resources that Tesla has. I think people need to understand that. But you can always put a purchase order in for a press. You can always get the latest and greatest material from Alcoa, from Steel Dynamics, or whomever, and you can always run a trial. The question is what's coming out of that press? What's the takt time of it? What's the dimensional stability? What's the cost structure going to be? Because it could be DOA. You could buy a casting machine, but you could still be DOA from a cost structure perspective. So there's a lot more to this than buying a casting machine and saying you're going to town.
Okay, let's turn to the general economy. In the Kobesi letter today, it says natural gas prices have been in a complete free fall for the last month. Since January 12th, natural gas prices are officially down 40%. Now, today, natural gas hit its lowest level since September of 2020. Warmer than expected temperatures have dampened demand for natural gas, and inventory gluts are building. And of course, natural gas impacts oil prices as well, and oil prices have stayed really down there, even in the face of the Red Sea problems and all the things that are going on in the Middle East. So what do you think? Are we now pretty well out of between the production in the United States and Canada and some of the other countries that have increased their production and another kind of mild winter, are we going to see these prices stay lower for longer?
Yeah, but we are one kind of conflict or one missile launch away from some of this stuff changing. But in general, the trend has been, keeping it down and under control. And I think the recovery in China being slower, weighs on this too. So I think there's a number of things happening, but I'm glad the number's lower because it feeds into every price of everything that we do, basically.
Across the board. Yeah, and one of the things is it does impact Tesla's sales because higher gasoline prices make Teslas a more important buy. Again, because
Right.
it's in the bicycle industry my entire life, gas prices went up. People went in and bought bicycles because they thought they were going to switch to bicycles for commuting, which they never did, but they thought they were going to because the price
Interesting.
so high. So the same thing happens with Tesla. If prices get up to $6 a gallon in California, more people rush out and buy them. So this is good news for the economy, good news for the world, good news especially for the poor and lower middle classes. This is a huge tax when prices of gas or natural gas or oil are high. So this is, I think, in terms of worldwide wealth, this is a really good thing. All right. So then speaking of worldwide wealth, or at least U.S. wealth, U.S. consumers cut back on credit spending huge in December, with the increase just 1.5 billion against expectations of 15 and the prior month of 12. Prior month of 23.4, all the way down to an increase of only 1.5 billion. What's going on here? Did the consumer finally go, I'm stretched too far? I need to I need to stop this stuff?
Yeah, they must not have swept in my Amazon Prime spending for the holiday season, because I think I would have put a dent in that number. But yeah, I mean, there's a number of factors that are out there. There's student loans. There's the you know, there's Gen Z being, stretched. There's a number of factors that are out there. Delinquencies are going up. Really, it's still, the rate of inflation has come down, but things still cost a lot, and they're still continuing to cost more
Right.
month on month. So that's taking discretionary spend capability away from people. So it's a number of factors that are occurring. I mean, at some point we have to cut rates, and we've got to make the cost of capital lower, so that, because yeah, we could be on the edge of something not so good.
Yeah. Yeah. Well, and so again, I think it's good news that people are cutting back, but of course, it could eventually impact retail and services. And so you could
Right.
start to see it move through the economy in a way that would reduce the overall GDP. So we've seen a bunch of the public companies reveal their earnings now and their guidances. Have you, because I know you watch a lot of them, have you reached any conclusions about the rest of the year? Is recession off the table? Is inflation done and deflation a possible result? Will productivity save the day? Just a few of my questions as we look over the overall earnings.
Yeah, I mean, earnings have been relatively strong, not the strongest that have been, in prior quarters, but you know, good enough. I think the bigger indicators of recession or no recession, first off, earnings are important. And I don't think there's a disaster. I don't think they're necessarily being hit out of the park, but these, personal consumption numbers, these ISM services are like, people are out there, they're still spending, and it looks like, from an expenditure perspective, the economy is very strong from that perspective. And as long as you have unemployment this low, I think those two factors will keep us out of a recession. If there is a recession, it'd be very shallow. But the thing to watch on, yeah, are consumers getting stretched, and what will be the telltale signs of that. But I mean, basically every economic indicator we got in January, and then the the verbiage from the Fed have
Right.
all kind of basically taken March off the table for rate cuts. We'll see. Something could happen between now and then, but yeah, very strong data points in the economy.
All right. And then one last thing, any updates in your thinking about the Delaware decision and what's going to happen or should happen next with regard to the compensation package, with regard to, uh, appealing the Delaware decision, moving to Texas? I mean, any of those that you have an opinion or you care to share?
Yeah, I mean, I think for Elon, he's 0 for 2 in Delaware court cases, and I think there was really no other move for him to then other than to move out. I don't know if Texas is the right choice versus Nevada versus what I've not studied the pros and cons of each state, but it's clear that something needed to change. The definition of insanity is doing all the same things and expecting different results. And then, yeah, what changes are gonna, what changes are, the board going to commit to when they go and do this? I think they're going to do another compensation package, probably be inclusive of the prior, and then they have to figure out a way, whether it's through appeal or what have you, of how to deal with these attorney fees. Like, we should, I mean, attorneys shouldn't be making billions of dollars. Yeah, that's just not, to me, it's un-American for a case like this, when the central figure in the case basically hasn't gotten paid, and you've got, the output of multiple factories being paid basically, to lawyers, and that don't produce a product.
Right.
And I'm not saying if you produce a service, it doesn't mean that your work isn't important. It's very important. I love, nurses, fire, police, that's great. But for these lawyers to get paid what they're getting paid for this work, I don't know, something doesn't seem right or American with it. And so I hope that gets addressed. They'll incorporate in another state, probably Texas, I think it's really incumbent for Elon and the board to say, like, we've come to terms on something and we've just got to move it through the process. I think the markets are waiting to hear from that. I mean, if you're, you know, an institution or, some sort of hedge fund, I mean, are you really going to be putting a lot of money in the Tesla with all this uncertainty out there? Or, you want things like this to be resolved and closed? So the sooner the better.
Somebody suggested yesterday that the board, maybe it was Gary, I can't remember, Gary Black, I'm not sure, suggested that the board of directors should put out a statement and or have a third-party investigator look into Elon's stability, whether or not he's doing drugs, et cetera, or just make a statement. Hey, we feel he's perfectly 100% fine, competent, not in any way constrained in his health or in any other way. What do you think? Should the board do something like that?
Well, I said that yesterday.
You
And
said that.
again, I could be dissuaded. I could be dissuaded for a very good reason. I know there's a general thought of, just be quiet during this period and zip it. But it is kind of eerie and strange that the board could come out and say, look, we've seen the ruling from the judge. We're doing a complete review of kind of our own processes to make sure if there's any appropriate corrective actions to apply, we do it. By the way, we think Elon is the greatest CEO and inventor of, this time period, maybe ever, and we support him. And if there's anything we can do to, move past this, again, with proper, approach and corrective action, we'll be happy to do that. But this whole thing of like just eerie silence, and you've got the CEO out there tweeting of like, I'm not sure I want to, do advanced AI here. That's going to be unsettling for investors. So we just need to move past it and not assume. We all assumed that this court case would have not won. So we, just sitting around and assuming everything's going to be okay probably isn't the right thing either.
All right, well, let's take a quick look at where the markets are. Jeff, we have got Tesla, of course, up 248 for the day and then down a whole 18 cents in the after hours. So apparently the traders got done doing what they were going to do during the regular hours. Let's move inside to the bonds. And we have the bonds. The 10-year is basically flat in the pre-market. 0.2% up. And that's kind of where all of the pretty much, well, we got the really short-term ones, like the 2-month is up 4 basis points. But the long terms are almost all, I would call them relatively flat. But that was we had a big bond offering today, and one of the biggest ever, I guess, in terms of new treasuries being sold or auctioned. And apparently it went well because we didn't see a massive reaction one way or the other in the bond market today, still sitting at 410 on the 10-year. Thoughts? Anything about that you want to say or not?
No, I'm just glad that, I'm glad that we're seeing some sort of stability there. There's been a lot of movement, a lot of Fed speak. There's going to be a lot of Fed speak, I think, still this week. So, and I know the Fed is more divided now than they've ever been. And so that's usually the point at where you see a formal pivot or a cut. So yeah, I'm actually kind of rooting on increased division until this thing gets over the goal line.
Yeah, that'd be good. We've got oil, as we talked about oil and Brent and natural gas just a minute ago. Again, both of those pretty close to unchanged here. Oil, the Texas Intermediate up 13 cents, natural gas up less than a penny. So we have got gold basically flat. Boy, everything's flat here tonight. Copper flat. The dollar is flat. Crypto, I don't remember where it was earlier in the day, and this is an ongoing one. It's not a pre-market.
Right.
And sitting for the entire day up 1345 at 44,466. No, that does seem like it's up. I think that's up pretty strongly, actually. And then we have it's going to be very easy to talk about the equity markets. Just call them flat. It's all like nothing. Like, I mean, up 6, up, down 2, down 2. It's like not moving at all here in the pre-market. So I guess we'll have to wait till tomorrow to see. This is kind of one of those off weeks in terms of the amount of news, except for a bunch of Fed presidents running around and spouting off, but they've been towing the line pretty good out there. They haven't been moving too far off of the company line this week. But next week we get CPI. So
and you still got a lot of earnings this week too. So there's still a lot of information that can come out.
right. All right. Well, Jeff, as always. Oh no, listen, I did want to say one thought here. I did have an amazing conversation with Scott Walter about Optimus earlier today and where the profits are likely to begin on the bot. He's talking about, not just him, but a couple of other experts that we brought into the story. Some production, some bot activity in the factories this year, some shipments in 2025, but the real cash flow, the real money starts in 2026. Fair?
Yeah, it just depends what you define all these things are. Putting a bot in a factory. What is it doing? Did it actually book output? Did it actually help that factory, or was it for show? And then in 2025, I mean, the CEO guided that there could be some limited production, and so yeah, I think this business model is going to play out again with scale on the hardware, and then scale on the services side. And I think it's got a pretty broad, runway in front of it. It's unbelievable.
Okay. So if you want to see that video, I put the card right here. And now I will say to you, Jeff, as we do every Wednesday night, thank you for helping us bring the good news on Wednesday and co-hosting this particular show. And for all of you out there, it's been great talking to you.
Thank you.